Let's invite Nikhil Ranka, CIO, Equity Alternates, Nuvama Asset Management on the show now. Nikhil, great to have you this Friday afternoon. I remember in our last conversation, you were betting big on cement. This was about a couple of months back, 2-3 months back. Now looking ahead, what is the one big bet that you have sectorally?
So good afternoon, Rima, and thanks for having me on the show. Rima, my sense is banking is one sector which is now starting to look incrementally very positive from these levels. If you see the last 12-15 months, banking stocks have gone nowhere because you had almost 7,500 bips of rate cuts and almost 40 bips, 50 bips of NIM pressure that they had to absorb, because of which even though loan growth was in 11-12%, your pre-provisioning profit was in single digits. My sense is Q4 should be the bottom of NIMs for all the banking stocks, and given the fact that deposits typically are in that average tenure of 12 to 14 months, a lot of deposits will also come for repricing in Q4 in that sense. So therefore, we will have a strong uptick in NIMs in my sense Q1 onwards for a lot of private sector banks. And if you look at valuations for most of the private sector banks, things are now below 2 times price to book, which had rarely been the case if you see the history of the last 3-4 years in that sense. So my sense is that from here on, banking should perform well. We should expect 12 to 15% upside in a lot of private sector banks from here on.
All right.
Nikhil, just recently, I think Citi put out a note where they were they were referring to Axis Bank, and they said that the NIM bottoming out has gotten extended by another 2 quarters. And the stock reacted adversely. It was down 4-5%.
Right. So, Rima, if you look at it, 40% of the books for most of the banks is linked to repo. The 25 bips repo rate cut that happened would ideally mean that there will be 10 to 12 bips of NIM compression. But the point is, a lot of banks are saying that a lot of deposits will come up for repricing in Q4. And therefore, there will be some balancing that will happen in terms of, NIMs not seeing that sort of downturn is my sense. And in any case, Q1 onwards, you will start to see some uptick in NIMs. And fortunately, we have not seen deterioration in credit cycle this time around. So credit cost will still be well behaved for most of the banks. Specifically, if you look for Axis, we are at close to 825 rupees of book for FY28, which would mean 1.4 times valuation. So my sense is that this price, a lot of bad news is already there in the prices. With a 12 to 15 month horizon, we could potentially be looking at the stock trading closer to 1.8 times price to book.
Okay, all right. Hi, Nikhil. Good afternoon and good to see you in. I recall a couple of months ago, you were talking about the Nifty, moving towards all-time highs. And that's precisely what's happened. With the 12-month time horizon, what do you think? What does the Nifty deliver in terms of returns in 2026? And since you normally don't stop short of, giving us a couple of names, give us a couple of ideas, two stock ideas. I think Biocon is something you've liked in the past. Fill us in with 2 stock ideas. So levels on the Nifty and 2 stock ideas.
So Nigel, if you look at it, in 3 months, we will start rolling over to FY28 earnings for Nifty. If you look at the consensus, we are today at close to 1280, 1290 rupees of EPS for Nifty in FY27, and FY28 would look somewhere between 1425 to 1450. If you give 20 times multiple to that, the Nifty's fair value 12 months down the line should be somewhere between 28,500 to 29,000. So my sense is from here on, the risk reward on the index is starting to look extremely good. We have seen the worst of everything. Trade deal has got postponed. We've seen close to 3 lakh crores of FI selling in the last 12 months in secondary markets. And in spite of that, the broader markets have been very well behaved. So my sense is the worst case downside on the Nifty for the time being looks to be closer to 25,500. And with a 12-month horizon, you should have a 10% upside, which will translate somewhere closer to 28,500 levels on Nifty. I would not like to take specific names of companies, but broadly, I think that given the fact that we have Jio IPO, which is there for the first half of next calendar year, There should be some excitement around the telecom names. It's been 4-5 quarters since we had the last 20% tariff hike in telecom. And my sense is just before the IPO, we could have one more round of 20% tariff hike in telecom stocks, which should keep those stocks buzzing.
For Jio, the company in the AGM had said it should happen, I think, somewhere in the middle of next year, the first half of next fiscal year. So middle of calendar year is what the street was anticipating. But they were waiting for the SEBI norms to bring down the minimum promoter offer for sale. Sale has to be 2.5%. There is that SEBI proposal because, the Jio IPO is going to be so large. So what Jio is waiting for is the final guideline from the government coming through that now the promoters can go ahead with the IPO by selling only at 2.5%. But I think as of now, from the chatter, the timeline, what the company shared in the AGM is still very much intact, which is the middle of next year.
Okay, so that's as far as Jio is concerned. Nikhil, so, finally, if we were to ask you, what is the biggest theme for 2026? Now, I don't know if it's going to be a dark horse, or if it's going to be more of the same, some of the names that you already took. But the one theme, the one trend, one set of companies that are likely to catch the headlines and catch the price action next year, what would it be?
So I think if the sort of Biosecure Act plays out very well, we could have some of the CDMO companies starting to do pretty well. We've seen decent correction in a lot of pharma names also. So that's one sector which, if policies turn favorable, should start doing well. Rupee also is an added factor for these names. And as I said, banking is something that we still continue to like. We still believe that the risk reward is extremely favorable in a lot of private sector banking names now. Incrementally, the downside looks limited to 2-3%, and we could have a 15% upside in most of the names with a 12-month horizon.
Thank you, Nikhil. Rich conversation, as always, full of insights. Happy weekend to you. Moving on now to what's happening in the future.